Hello everyone and welcome to the new market weather bulletin. Today is Tuesday, 29 of November, so time to chart a little bit Bitcoin, map some level, form some bias, and see if we can find some trade setup. Honestly, I feel a little bit rusty because last week was really a non-busy week for me. I almost didn't trade. So I need a little bit of warming up this week. I feel to start to go back to proper execution. Before moving to the chart, as always, big shout out to Bluefin for sponsoring this video. You will find the referral link in the description below to join this super cool exchange. To be eligible for a 20% discount on trading fees and to join all the cool campaign we run with the Bluefin team. Also make sure to subscribe to the channel, leave a comment and a like, so we will be all set and we are ready to go and to check some chart. So we start on the high time frame on Bitcoin. This is the daily. And there is a few consideration. As always, the first one on high time frame with a naked chart is the structure. This probably the one we are seeing is potentially a weekly structure, and somehow we can argue that this is still a bullish structure, with the exception that we saw in some previous market bulletin of this high and low that is definitely being violated bearishly. Except this high time frame market structure that is potentially still bullish as long as we hold the low at 75k, all the other time frame the structure is bearish. So if we check on the 4 hour, 8 hour, 6 hour, and probably everything down to the 1 hour that was broken bullishly on Sunday, all the other time frame the structure remain bearish. So since we are potentially in an area where on high time frame, remember price is fractal, so we can have a bias or a structure in high time frame and a different one in low time frame, we are potentially in a level where we form the next higher low, lower higher low. So definitely an area where we can see some relief in terms of market structure, and definitely not an area where I would look for a swing short, because the place to open swing short was potentially this rejection here or this swing failure pattern up here. So the structure tells us that we have to start to be at least careful with short, because always we look for short on the highs, not on the lows. But it's telling us also that we are very close to the possibility to break even the structure on this very high time frame that is potentially the last high time frame bullish structure standing on this chart, as we are downtrending on the daily, 12 hour, 4 hour, and so on. The other important part to note is that RSI has been reset pretty deeply on this drop from 126 to 80k, 36% if I'm not wrong, and we are trading again in oversold territory, as you can see here, as we were doing more or less all the time when we form potentially high time frame lower high. As you can see, all the time we form this high time frame lower high, we were more or less in oversold territory. You will find on the Learn and Trade series an educational video on RSI and how I use it. Generally, I don't use per se the oversold and the overbought territory, because it's normal that in an uptrend the price stay long time in overbought and in a downtrend in oversold, but are usually interesting place to look for a mean reversion trade or for a reversal. What I would look here is the development of some sort of divergence, more or less what happened if you see down here when we started to form lower lows on the price and higher lows on the RSI. So an interesting area, just will not blindly long simply because we are in oversold. The price can stay in oversold a long time and keep downtrending, more or less. If you want to see an example, here we were in overbought, price was more or less here at 87.90k and the push 30k higher. So price can still push higher even if the price is in overbought and oversold territory, but is an interesting area to look for a reversal. So this is the first consideration to form a bias, is the high time frame structure and a quick look at momentum indicator, the RSI. Now the other complex situation we have, and the one that have been monitored for quite long time, not being so precise with the level, just to make it simple, is the fact that Bitcoin basically formed, and that's why I had the bearish bias over the past weeks, a bearish deviation of this range, similarly or inverted of the bullish deviation we had here. And as we have seen here, when we had a bullish deviation acceptance back in the range, we have a break above the other side of the range. So here the problem is the same but inverted bearishly, because we had a bearish deviation and we are threatening to break below this range and potentially, as we started an uptrend here, to have a prolonged downtrend that could potentially even go much lower. As I always explained in the last market weather bulletin, the worrying consequence of this bearish deviation is that, at least on my playbook, this is the first deviation to the above, bearish deviation, bull trap, whatever you want to call it, that Bitcoin had since 2023 when we started this run. Most of the deviation happened to the lower part of the ranges, with probably this little exception here, where ranges were deviated below and the price continued to uptrend. This is the first time, at least from what I can tell from the chart, that we had a bearish deviation, so a distributive phase that is potentially, that has already opened the door for this downtrend we have saw with the 36% move down, moving the price from 126 to 80k, so 46k, and I'm not sure it's over. I mean, I'm not sure this distribution that lasted for 3 months has done its job, and only time will tell. So with this consolidation, we have a mixed signal, let's say, for the bias in terms of market structure and ranges, and for sure a fact that both of them are telling me that short here should be careful, because despite the deviation, we already have a significant drop and we are trading more or less at a support or range low level. So at this stage, I'll try to define better the level. So this range now is in full effect. In the past I was selecting until the deviation. Now we fully traded back inside the range, so we can use the full fixed range volume profile to select all the range to have some level. And we can see quickly that this is definitely our value area high, and we can always double check if the level are respected, and you can see here that was chop, but here with this double top was a clear bearish retest of this value area high, and the price dropped further down. We do have our point of control that now is potentially a resistance level. This is the level where we had most interaction on this wall range that has been developing since November 2024. So this is a 1-year range, something very relevant, where there was a lot of exchange in terms of price action, volume, time spent here. And this is the value area low of the same range. Just to see the relevance, more or less we can see that this bearish deviation was more or less below value area low, and we are just trading at around that level. Volume profile is not telling us much. You can see it with the visible or with the fixed range. We can see for sure that the point of control is in the most traded area here in the volume with the spike, and also we can see that this level here where there was a pretty decent amount of volume spent is where Bitcoin is more or less finding support at around 80k, so a normal level to see some form of defense. So we can remove this and have a better definition of this range. So normally in a range environment, we know that value area low is definitely a place where we can look for long. Usually my strategy would be to check Fibonacci, and you see we are trading exactly at the 0.75 level, and the other point would probably to select some sort of demand. In this case the relevant demand is the weekly, because we had a weekly market structure movement exactly here. So as you can see here, there was this downtrend on the weekly. We form the low here, we started to push, so we selected the last red candle that pushed the price higher. I'm just checking the 3 days, more or less is potentially this one that give us a little bit of more defined level to work with. So this is potentially, just to leave you with a clean chart with all the relevant level we have been discussing. We make this smaller and we are good to go. We go back to the daily and we see that price is more or less holding at value area low, is holding the 3-day demand, and is chopping around the 0.75 level. So this on high time frame give us a little bit of confluence for this level, potentially for a long. Also we know that the structure here, again, it's where the structure is making sense, let's say. Liquidity wise, we can see, we know there is this low, but this is a sort of price action. This is probably interesting for you to understand, where the business was finished. So we started to move higher, taking out all the lows. So you see there was this low was taken out. This low was taken out, and the last low that created all this impulse move from 74 to 126 was actually a low that take out another low. So to me this is a powerful low. What are not powerful low? This one, for example, when the liquidity is not taken, so price push high, and we know that here there are stop loss left behind. All these two lows were with the stop loss that were taken out, so we have some remaining liquidity below this, but these are powerful, strong, they are not unswept lows. So what does it mean? Means that if the price would start to push lower than 74 would be a trouble, because then we do have here, as you can see here below, price push higher in this way. These are all potentially liquidity that can be taken out. So as you can see, whenever the price is going down in this way and starting to go up, we know that here the liquidity business was completed. But if we start to form something like this is problematic, because these are poor lows, the business here is not finished, and we potentially will come back to take out this low and then move once again. As you can see in both cases, on this range on Bitcoin, the liquidity business, at least for my style, the way I see the chart, is completed in both directions, because in both cases we have a proper manipulation, a proper distribution or accumulation where all the lows were taken and then price started to reverse to the opposite direction. So saying this, I think this is an interesting area to look for a defense, at least from a liquidity, from a range perspective. So it's an area where we can start to go a little bit further down and monitor what is happening on few levels. So the price has been pushing higher since Sunday, I think, where we had a low time frame market structure break, has been reaching on the 4 hour the 50 level. That is a key level always to monitor in any relevant time frame, especially for me from the 4 hour above. We had this spike, and now it's pretty important for this structure to hold. Why? Because either this structure, now the market just opened, New York market just opened, either this structure keeps holding and push the price higher and maintain above this 3-day demand and value area low, or we might still run this last low. And I think the evolution of today on New York price action will be very telling. I don't see, at least on this time frame, any bearish divergency, but let's say so far this doesn't look a proper V-shape recovery. So there is some interest on buyers at this level to defend this level. I think if you look in a time frame, you can see the wick to below pushing higher that show some buying pressure, but nothing so fancy. A V-shape recovery, for the people that doesn't know, but the name is very telling, is where you have this sort of price action. So the sort of price action where there is a strong red candles and consequentially some strong green candle making this V-shape form. We will see how the daily evolve, but I think if this daily candle start to trade below this low here, then we'll see what that low is also. This is by no chance a sort of V-shape recovery. If you want to see an example of a V-shape recovery, is what we had here, and as you can see, daily candle rarely close below the previous one. So we have, despite being green or red, okay, in my case blue or pink, no candle is close below the previous one. So all this daily candle push the price higher and higher and never close below. So this is what more or less you want to see today, where this candle is never violating the previous day candle low. In lower time frame, you will see that level is exactly the structure we are trading in here. So violating the daily low that I mapped. To show you once again, if you see this low here on the daily is exactly the structural low we have here. So the evolution of today is important to keep this structure intact. Should we start to break below this low and let's say go out from the potential daily V-shape recovery, I think we have to start to monitor something else and potentially consider the fact that we could keep downtrending and we could keep going down to take once again the low at 80k. Also, if you want a referral point, never to be super precise, to be a little bit flexible, is more or less the 50 level here on RSI. As you can see, we break above, but we are breaking down below once again. If you see here, the 50 level RSI is pretty an interesting level to monitor strength and weakness on any sort of trend. So you see here there was a bounce on Bitcoin. It was short-lived, price started to go down, and more or less is what happened here on the 50 RSI. So usually, at least in the 4 hour, if you want to gauge a little bit the prevailing trend of an asset, especially Bitcoin, whenever we are below the 50 RSI, still you have to be cautious with the long. When we are above the 50 level, usually buyers are in control. You can see it most of the time, price push higher, RSI 50 was higher. If you go for sure in higher time frame, you will have a better trend monitoring. As you can see, this is the 12 hours, the 50 level now is clearly acting as a resistance on all the push higher we have, but we are still well below it. So going back to our 4 hour, we formed some bias, we created some narrative behind what can happen. So either we decide to chase the price in this structure that we selected here, that is mainly this low to be defended at this level, exactly where we are trading now that I'm recording, but personally not so interested on chasing this level. Probably there were better entry years when we broke the structure on the hourly. What is giving me some vibe to be cautious is mainly this range we have been formed. No need to tell you that I really like ranges and they give me a lot of clarity on the price, mainly because what we had yesterday on Monday was this bearish deviation, price find acceptance back inside this range. So I took a short more or less at this level purely from a range perspective. I would not be surprised if we start to range further here, because going back to the discussion of the V-shaped recovery, usually price after a very strong trend, in our case a very strong downtrend, have mainly three options: to continue to downtrend, but again this downtrend probably is temporarily exhausted. So after a very strong downtrend we can have a V-shaped recovery when price start to push very strongly on the other direction, and this is not what I'm seeing, at least so far, or price might simply start to range. So to consolidate, to form a bias, to test willingness of buyers and sellers to interact at this price, to decide what to do next. That's why for me it was making sense to start to trade this range, because despite what many other traders think that immediately we can start from this bottom to go straight to 200k, I think the market often is not black and white, but can be gray. And the gray way of manifesting the market is usually trending. And this is what we are getting now. That's why I don't have a super strong read on the market now, basically because we are a key junction both for a potential bullish reversal, but I don't see many signs for this bullish reversal, so I'm still cautiously trying to trade smaller move, let's say, not aiming at 20k or 200k straight from here, but simply trading smaller level and trying to protect my capital. I don't have any conviction at this moment. Again, I see people giving crazy target left and right. For me, it's difficult to be 100% sure that this is the higher low on high time frame because of the bearish deviation I explained on the video, and the potential downtrend that from here will last long. So I keep myself very fluid on this structure, on this market, and will try to develop trade ideas along this level that I will try to share you soon here on the chart. But in case you want to trade, remember to do it with me on Bluefin. Bluefin is a super cool exchange, non-KYC, so you simply need an email address to join, no need to share any personal information. It has a lot of liquidity and more or less the same interface of Bybit, if you are familiar. So you can join using the referral link on the description below. You will be entitled of a 20% discount on trading fees, and you will be eligible to join all the cool campaign we are running with the team. At the moment we have this campaign that will last for another 10 days, where we will get reward both on deposit and on trade volume. So for deposit you will get a 10% cashback in the form of a future bonus. So if you deposit 1k, you will get a future bonus of $100. Also you will get reward according to the volume. So if you will trade 100k as a volume, you will get $100 of future bonus. You will find all the detail of this campaign on my Telegram channel, and you will find the link to the Telegram channel, the Popeye Thread Room, again in the description here below in the video if you are not already a member, but highly recommended to join. So make sure to trade with me on Bluefin. So what is the plan here? The plan for me, as I'm a bit conflicted, as I explained all the video in terms of bias, is to monitor this range. Monitor this range, keep my short risk-free with the idea of taking profit here at range low, and potentially developing bullish position either at the lower part of this range or even if this range would potentially be broken. I can clearly see, and I can see your question, that here there is, yes, a range, but there is also a clear, this is the 1 hour uptrend. So this uptrend is very visible. So is definitely dominant here on this chart, and is more or less this uptrend that we see here. But the problem is that RSI is started to show weakness, as you can see, breaking down the 50 level on the 1 hour, and started to have this bearish divergence here. So to me, I'll try to stick a little bit to this range to see what happens. Definitely would have a much stronger bullish bias if I see this range breaking to the above. Potentially also interested to long again the range in case we get some sort of deviation of this level. And the other scenario, if this range is breaking below, I will not touch any long before seeing the reaction here down at this low, where potentially we can still be in a bullish scenario above the 75k higher low we mentioned at the beginning of the video on the weekly chart. So still in this weekly or 3-day demand, that is this gray box, because you remember we discussed about this RSI pattern here. So we could be interested if we get another sweep down here with a bullish divergence in RSI. So potentially price forming another low while RSI is forming a divergence, a bullish divergence on the price. So this week I'm sure the bulletin is a bit confusing, less clear than the other week, but because this is my view. whatever, even though I would like to have more exposure in longs, I still don't feel personally or don't see that sort of strength in the market that allow me to turn giga bullish. At this level, I would like to take trades where the risk reward is very narrow, so I don't like to open swing trade that looks something like this. To give you an example, with the stop loss here below, and so consequentially aiming at, I don't know if you have to take a trade like this, you should aim at 20k higher. I much prefer around this level to trade lower level 1 hour time frame when I'm in front of the chart, and takes trade similar to the one that I took here earlier today, that I shared yesterday night as a potential scenario, and I took in the morning, that look more stuff like this. So simple trade, simple level, and very simple invalidation on this level. So the long would potentially, if we get a bullish deviation, would look something like this, and then we can aim a little bit higher, but for sure taking profit here aggressively. Outside of this range, as I explained very clearly, as long as we range here, I will keep a range mentality. So the range boundaries, to make it more clear, if you cannot see clearly on the chart, are the one formed Monday and on Sunday, 88k and 85k. As long as we stay between this level, I will have range mentality. Remember that we are at value area low of the range. Should we break the range below, only interest will be down at the low here at 80k, and should we start to break after an accumulation on this range to the above, buyers could be interested for a much bigger swing long, but we need to see the development. So I think it's everything for today. Want to keep this video not too long. I know it was not a clear trade plan as we usually have, but I think not every week are the same, not every level are the same. High time frame, still we are in a strong downtrend. I can't justify swing short position here, but I can justify even swing long position. So I will try to be fluid and flexible over the coming days. As always, if you have any question, make sure to drop me a comment down below or in X, wherever you prefer. As always, if you enjoy my content, make sure to subscribe, leave a comment and a like, and to have the notification on here in YouTube, and make sure to trade with me on Bluefin. You will find the referral link on the description below. I think is everything. I'll keep updating both on Telegram and on X as always on daily basis, and we'll see next week for the next market weather bulletin. In the meantime, stay safe out there. We'll see you in the next one. Bye.